video. So today I want to give you guys a nice detailed update on the S&P 500 from a technical, fundamental, order flow as well as a sentiment perspective. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. If you enjoy the content, please smash the like button for the YouTube algorithm. And as always, let me know down in the comments below exactly what it is that you would like for me to cover in my next video. So there's been a lot of positive data that was released for the stock market in particular. We know that Elon Musk bought another 7.9% of Tesla, and Apple was up, everything was up. So it's kind of time for us to adapt to that there as well. Now we're going to start with the technical analysis. Now if you start here on the monthly time frame, what do we see? Firstly, if you look left over here, we can see how the market had printed a strong level of resistance, broke above that, came to test it as support, and we can see how all of that support that is now turned resistance is quite being aggressively rejected there as well. So we can definitely expect this market to continue slightly higher before we could potentially see some pullback, as we do know that it was reported that according to IFAX, they say that Russia and Ukraine is still continuing with the intensive talks as well. So as long as there is uncertainty in the market, then the stocks normally react negatively to it. But because of this report to say that Russia and Ukraine is still continuously talking, investors are kind of feeling a bit okay. So if you drop down here on the weekly time frame, what do we see? Now from a weekly perspective, market printed support, resistance, broke above that, came to test it, giving us the indication we can definitely expect this market to continue higher to at least that level before we could see the next pullback. Now if you drop down on the daily time frame, what do we see? Now I did this breakdown as well on Sunday when the market was sitting at this level. I explained all the reasons why we could potentially see this move to the upside take place there as well. Now there is a high possibility for the Nasdaq 100 to go and test this previous structure that it had created over here. So yes, we can definitely expect the Nasdaq to go up and hit that level. The only question is it gonna go further up and then pull back and then continue higher? But as traders, we have to be reactive and not predictive and learn to adapt to the ever-changing market environment. So that move alone there is going to give us at least just over 5,000 points and 555 or 562 pips. It doesn't matter basically how you calculate it on your side, because I know some people are very aggressive in the way that they calculate that as well. Now that is what we're expecting to happen there as well. First article we got over here is from Yahoo Finance. We can see a stock gained on Monday as investors monitored the potential for more sanctions against Russia amid ongoing concerns over inflation and global economic growth. But a lot of that also came from the fact that there were reports that Russia and Ukraine is making some good traction and making some good progress, because that is exactly what investors want to hear. They want to hear that there's some indication that the war is going to come to an end. It also says here that the S&P rose and the Nasdaq composite gained more than 1%. Technology shares outperformed. Shares of Twitter was the highest gain for yesterday when Elon Musk disclosed he now owns about 9.2% of the company. However, the Dow Jones did not do so well yesterday, but I guess we can't all win there as well. Now, this is the article that I was referring to. So it says here Elon Musk just bought 9% of Twitter. Then it's a whole article of how much you would have been able to own. So yesterday, Twitter was one of the most successful gain stocks on the S&P 500, which was good to see. Now we know that the fundamental data drives the overall momentum of the market, so we can definitely expect the S&P 500 to continue this bullish momentum there in the long term as well. We could potentially see this move take place and the market could go and test those previous highs in the market there as well. Now the next thing we are going to look at is the sentiment data. So the sentiment data basically tells us how many retail traders is long and how many retail traders are short. So the sentiment data tells us what retail traders are doing in the market. We can see over here that we have 49.26% of retail traders that are buying, and we have 50.74% of retail traders that are selling. Now I always say that you always want to be on the opposite side of what retail traders are doing, and in this case it's clear that they are looking for sells but we know that the overall, well, the difference between the two is not that much. But we can see here the trend bias is bullish as well. But one thing that we need to keep in mind is also with the yield curve. If you missed out on that video, please go and have a look at that as well. A yield curve normally occurs when there's a full dump in the market and the market then pulls back this quick here as well. So you can see here we had a massive dump and the recovery was quite quick. Yeah, we had a couple of days for the stock market to recover. This is not even this is just over 2 weeks for this move that had happened. And if you look here, this move took from January all the way up until March, and it recovered 50% of the losses within a couple of days. And this is normally an indication that you could potentially see a recession take place, because we know that the yield curve is also getting to that point. But as it is now, we are retail traders, so we just need to go with what we see. So that's the retail trader positions in the market. Now the next thing we are going to look at is the COT data. So the COT data is the commitment of traders and tells us what the biggest banks, hedge funds and institutions are doing in the market. We can see here, based off the last report, hedge funds actually added 557 buy positions, and they also closed minus 106 sell positions. So we can see how hedge funds is also buying the SNP500, and that is kind of exactly where we want to go as well. So as it stands now, this move is definitely expected. We only need to question ourselves once we get there in terms of whether we're going to get a break above that, a pullback, and then a continuation. Alternatively, whether we're going to see this market continue higher and go and hit that previous level of resistance that it had printed from a monthly perspective. I want to say thank you for your time, thank you for the support, and as always, cheers for years.